you know, this is the current trade here. And you can see quite clearly from that storyline, you can see what the little guy's telling us here. He's saying, look, if they take it below this liquidity, there's a good chance that it could be a manipulation. So we try and verify the story, don't we? As good professional traders, we try and verify the story. So I took a quick look at gasoline prices. And when we looked at gasoline prices, they have started to improve quite nicely. And obviously, they've improved quite nicely based on quite a significant sell-off here, which is obviously what's happened to oil there during that process there. So obviously, they've started to rebalance up a little bit here on the gasoline. And when they rebalanced, of course, that should be the crack spread going bid. You can see the crack spread goes bid in front of that quite nicely, yeah? So the crack spread goes bid, then gasoline goes bid, and then that means that the reason for that is part gasoline bid, part oil offer. So obviously we now look at that from that point of view of saying, okay, perfect, that's exactly what we would have wanted to see from this storyline. So, you know, I quite liked it. There's a few things against it, of course. The bond buy trade is against this oil trade at the moment. That's what we were talking about earlier about having an inflation hedge. But when it came into the bottom edge on the first occasion, I thought, you know what, we've already came off the rejection here. I'm going to take another shot at it. So I did buy some 82s. We got up to the prior swing high. I thought there was probably a capper here. Why did I think there was a capper here? Well, because they haven't done anything yet with this trade, right? You're wanting to get a sweep. You're wanting to get the business done. There's a fair amount of buying in there that never went anywhere. So obviously I'm thinking that they're going to sweep this a second time. So we've taken a trade. We've made 15 ticks out of it. I've taken the trade off it. And I'm waiting for something a little bit better to show up. And if it turns out a little bit better, we should be in pretty good shape. Now, Sammy was talking about an indicator yesterday, which is basically a representation of the tape. And when you look at a representation of the tape, you'll see that what happened to the tape was it went very sell side. Look, the tape went very, very sell side. So if the tape went very, very sell side, I told you what we'd need to do with that type of information. So if you're going to think about buying this, what do you do with that information? Well, you certainly don't just step in and buy it. But what is the tape representing? What does this effectively represent? Delta, right? So if I'm looking at oil and it looks as if there's a heavy sell coming in, well, you can see the heavy sell on the delta line, can't you? There's the heavy sell coming in. So unless somebody jams that, there's no way you're going to try and jam it, is there? There is no way you're going to try and jam it. We had a Charlie D reversal candle there. Do you agree? So we had this perfect Charlie D reversal. There's the trap right there. Charlie D reversal candle on that one there. And obviously with the Charlie D reversal there, all I did was close out my positions at 15, right? And since then, of course, the price is sold off. So if I'm going to buy this Charlie D would obviously, if we got a Charlie D, would be probably a good thing to see in here, wouldn't it? So we might still see sellers, but now we see them getting trapped. We see them getting jammed. We see them doing whatever they're doing. But if we don't see that, we still haven't got that buy trade. We've got to use a bit of common sense. We've got to have that ability to have this, what they call the trade smarts or the street smarts. You've got to be able to make sense of what's going on the right-hand edge and fit it into your current jigsaw puzzle piece. What am I not seeing here? Am I going to buy from this very aggressive selling? Well, nobody else did, so why would I do it? Why would I do it? That's why we've got these smart money lines to help us identify that somebody's buying against the selling. So when I was thinking about buying this original trade, was I buying and did the smart money have my back? Well, the smart money had my back when you saw this selling coming in and the smart money went bid in here. So I've already seen that smart money buying at this price at that point. So I'm not really guessing on this one about a buy trade here with a top line at 15s. I'm seeing it and I'm trading it. But when I see a Charlie D, it's game over. Reeve mentioned a few weeks ago, you could almost trade your entire day trading Charlie D reversals. He wasn't wrong. He wasn't wrong. Charlie D reversals are very, very, very valuable. So this little reversal in here with the smart money wasn't a Charlie D reversal. But if we go back to the prior low, which was this one, that was a smart money reversal. That was a Charlie D candle, correct? Look at the delta. There's your trap. There's the bullish candle. Look at the smart money. So obviously at that stage there, what did we also see? We saw a level. So when I saw that level, that's where I decided to take my buy side short at it. Did it work out? Well, if you count 15 ticks or $150 of profit as working out, yes, it absolutely worked out. Did it kick off? No. Could it have kicked off? Sure. But when we get a Charlie D reversal there, followed by a Charlie D reversal here, if you're still long, you just don't get order flow. Because if you're long when you've got these two Charlie Ds side by side, you must be mad. You really need to go back to the classroom and learn about order flow, because two Charlie Ds against you there is telling you this bottom edge is going to get taken off the numbers. And if you're still sitting there like an absolute doof, well, no luck. Not much you can do about it. You need to see this happening. You need to read this storyline, guys. So this storyline is on your screens. That's what that tape reading, this blue line, pink line, is tape reading. You might not think of it as tape reading, but that's all it is. Delta is the tape reading. It gives you every single traded trade going through, every single one of them. And it gives you the net position at any time. Well, that's what this indicator here is. The net position at any time. So you can see that the delta just now is bearish. And you can watch that delta changing. And as the delta changes, you might say, well, I'm not going to change unless I see the delta jamming price. Unless I see a Charlie D reversal coming in, I'm not going to take my shot at this. And, well, you wait for the Charlie D reversal to come in, and then you take your shot at it. You take your shot. You go ahead and say, right, you know what? I'm going to go for this and see what happens. And that's called trading, guys. That is called trading. Absolutely. And if you want to buy it, you know how you're going to buy this. A lot of sellers coming in. So unless you see it getting trapped, you've got to buy it on the dip. You've got to buy it on the angle with the selling coming in. If the buying starts coming in and the selling dries up, you can now try and chase it away from it. In other words, cross the spread to get some business done. That's up to you how you're going to do it. But at least you know what type of trade to put on. You know how to play this out. We did get another whisper, guys. We got another trade whisper there. Did Kim not say she was bringing in a guest presenter today? I thought she said she was going to bring in a guest presenter to send me with my books packing. But I haven't heard any guest presenters yet.
No, I wanted to know if I'm going to try to see if she might. I think she would be perfect for you.
I think everybody would probably agree. I think everybody's fed up listening to me now. So
Never.
it's time for a change. Time for a change. It's time for me to retire for a few months. Let somebody take over for a while, guys.
No.
Nice buy trade then. You know, obviously, we're still at that 81.96 level. It's still not sticking around. Why? Because the selling's still coming in, right? So if you're trying to buy it and you're trying to buy it at higher prices, you're going to get stuck with that amount of selling coming in. So if you're going to get stuck with that amount of selling coming in, that's the problem, right? That's the problem. Still a lot of sellers. So these guys need to piss off and let these guys come in and start taking this. So at the moment, you say, well, why would I want to chase this? Think about it. Think about what Sammy's thinking when he's looking at that indicator. He's probably thinking about where he's getting his next blonde beer from. But he's, you know, realistically, when he's got his trading hat on, he's probably thinking to himself, why would I buy this just now with enough sellers coming in? I'm going to let this drop down a little bit further to take advantage of a lower price, a lower starting point. And then I'm going to maybe look at buying into that as a storyline. And that's what every trader does. That's what every professional trader does. They look at how much selling's coming in versus how much buying's coming in. It's called tape reading skills. And if we understand that that's what tape reading skills are, well, whether you use this as a tool or whether you use delta versus the pink line as a tool. That's what tape reading is. You've got to use something to get the story right. Otherwise, you're flailing around blindly, hoping that you're able to make a decision based on the tape that you're seeing. Now, I do have a long trade on oil. I've got to stop at break even. And if it sticks around, it sticks around. If it doesn't, I scratch out for +1. And the reason why is because we got a Baltic kicking off. I have been scratched out at +1, guys, so I'm waiting next for the next trade. There was a Baltic at 87, so I got a trade on at 88s. So I put in a little trade at 88s on the last Baltic there. So I took a little trade off the 88 price point against that narrative. So that's where I got my trade from. And that's obviously what I'm looking at the present moment is whether that Baltic stays in play and the market goes bid, and whether these sellers disappear and we go bid side. And obviously what will happen in this little box, Sammy's maybe already mentioned it if he hasn't, but what happens in this little box is that as the imbalance becomes significant, this box will go from a black surround box to a blue surround. And it'll turn into that more bullish blue surround narrative, yeah? So it's just about stories, guys. Everything that we do in trading is about the story. Within a few seconds, the story can change, just like your delta can change, just like your limit order book can change, just like your value can change within seconds. For a lot of people, they'll never get used to this. I'm not asking you, this is not a trade signal. Sammy's not suggesting that this is a trade signal. It's just the tape. And the idea of reading the tape is to give you a few clues about how aggressive the market is still selling or how passive the market is on the bid. So if you're understanding the value of tape, then that's where you make the breakthrough in terms of your tape reading skills. You can see that the sellers are starting to give up on this now, and the buyers have come in, and what's happened to the price? It's rolled off the Baltic again, hasn't it? So guess what I did against the Baltic? Sure, I bought some more. I scratched out at +1 on the last trade. I bought some more, and I managed to get a little 5-tick profit on that one. Managed to get a little 5-tick profit, not much. But I'm obviously just watching to see how this plays out. I'm watching the storyline at the moment. I'm trying to not get committed into it. I'm getting an easy $10 out of my trade. I'm not taking any chances because obviously I'm a weak-handed buyer, correct? I'm a weak-handed buyer at the moment. I'm not a strong-handed buyer. The smart money hasn't gone bid yet, so I know that I am probably on the wrong trade at this point, but maybe I'm not. So I'm willing to take a chance on it. I'm maybe willing to take a scratch trade if I can get in a good price against a lean. I'm willing to take a chance on it. But obviously, the more pins we get here, the bigger the probability is that they're going to run a sweep here and pop this to 18.75 and then maybe go bid. Okay, well, if I know that, I don't get trapped by it. I get my 5 ticks, I get my 2 ticks, I get my 1 tick. I get whatever I can get, and I just keep adjusting according to how the tape reads, and I make my adjustments according to that, right? And I just keep working the orders. This is what working the bid means. I'm working the bid. I'm trying to get my trade on. I'm trying to hold a position in play. I'm trying to make the right trade at the right price. It's not that difficult. Tape reading. It's not just for classroom sessions, guys. It's for every day. So that's my current oil trade there. So you can see we got the Baltic at the bottom edge. You see the Baltic there. So we got the Baltic at the bottom edge. That's what I'd been leaning against. So I got the first trade on. That was the one I got 5 ticks out of. I got scratched out at +1 on that trade, right? And then the price tapped the Baltic here. It rejected the Baltic here. And I came straight back in here, and I'm back in a buy trade again, seeing if I can take another pop off this price. So I've had 2 trades off this one, 5 ticks and a scratch, and then a second trade now, which is also making, a little bit of money. So worst case scenario, again, stops are at break even. We're not going to lose money on this bit of business, are we? I still don't think it looks good. I still think we've got a problem here because obviously somebody's came in and capped this. And because somebody's come in and capped this, of course, there's always the chance that we may have to work this perhaps for the next hour on the buy side, on the drip, right? We're going to be getting these little drips through the bottom edge. Maybe we'll get a buy, maybe the value will change into a sell. I don't know what's going to happen, but the idea is if we stay on that long side, then that's probably how this is going to evolve. You know, we're going to get that as a storyline eventually, and there will be a bit of an opportunity. Now, the only challenge I've got is that the trade log is still talking about buying bonds on dips. So if the trade log keeps talking about buying bonds on dips, then of course at the moment that means that the oil could still be sells on rallies. So I'm very aware of the fact that this could still be very much the top edge that we might not be able to get through on oil today. But I've still got to play it as I see it, right?